Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Friday the 14th of August. Starting off with the first, I'm looking at a 5-minute chart. It's a requested stock and I don't want to disappoint. Corcel is the name of the stock, and obviously we don't have much history with the stock split, etc. But there's enough here just about to make some kind of call. View at the moment is that while we, a break of that initial 1.4 pence resistance, today it could take the shares up to the top of that rising trend channel that I've drawn up, guessed where the top of that is. And that upside valid while we hold above the 50-day moving average in the floor of the channel at 1.2 pence. So above 1.2 pence, a break of 1.4 could lead to 1.8. If that works, I will be impressed myself. Next up is a stock which has been given punches by certain parties over the recent past, but as we've seen, especially recently, it's almost like the more a stock is attacked on the bear side, the better it performs. Here we've got a clear break of this near-term, very thin triangle in place since the beginning of June. Neckline resistance there on that consolidation at 5.2 pence, so above that on an end-of-day close or a weekly close today, and the shares could be back up at 8 pence, which is also the level or the area of the 200-day moving average. Only really back below the 50-day line now. 4.37 really kills the recovery argument for the shares. Stock where there's no controversy at all, I would say, is 4D Pharma. Here the stock has performed beautifully, breaking out of that mid-move bull flag there either side of the 200-day moving average at 67 pence as was expected. And we've actually hit the top of that channel that I drew from February. I suppose the top there was around 97 pence, so we've hit that particular level. As far as the stop loss is concerned, which somebody has asked me about, the initial August high was 75 pence, and that was the previous call. I suppose you could stretch it up towards the 80 pence area, but really that is still the level at this stage. If you're looking for where the shares may go next, probably towards a line of resistance there that I've drawn from February at 120. So end of day close clear of 100 pence could give us an extra 20 pence of upside while we're above 75 pence. Sorry, the stop loss can't be any tighter than that at the moment. Eve Sleep was another one which the naysayers were really into and been proven wrong on. Here we've had this beautiful progression over July and the start of August. End of day close above 4 pence, and the initial August peak could give us a target at the top of the rising trend channel from October last year, around 5.1 pence over the next couple of weeks. Stop loss at this stage back below the 20-day moving average and the recent flag floor at 2.93 pence. Yet another stock which has been bashed by the bears and starting to rally now. I was a bit cautious myself about it, largely due to those sorts of negative jibes, but we finally bounced off the floor of this support line there from April. That was around the 0.1 level. End of day close above, I suppose that last peak at 0.13 would really be the best signal for this stock. If we can get through that either today or early next week, then a move to the low 0.0220s could be on the way over the next few weeks. Good to see the RSI back at 50 plus. Best case scenario target for the shares up to 0.045, which would be the top of the broadening triangle. Incidentally, a similar broadening triangle to supply at me, which I'll be looking at later in this particular video. Another hated stock by some is in Spirit, and here you can see that we've broken out nicely. Basically, yesterday we broke neckline resistance, or initial neckline resistance, about around 0.06, and we're looking to have an end of day close above 0.08, which was the June peak. If we can get that, or at least above 0.08, we're looking at the top of that trend channel from December, as high as 0.14. But the shares certainly on their way at the moment, and really at this stage, only really back below 0.08 would really delay or upset the recovery argument there. Stock which was a bit surprising during the week, actually, the way that we had those slow down days, but we've got a sort of a V-shaped bull flag in place. We're above the 20-day moving average as well at 36 pence. So end of day close above the 20-day line, and 37 pence, the initial August high, could be enough to at least take us up to the 200-day line as promised before. Best case scenario target at this stage would be a hit of that line of resistance from January, around 65 pence over the next 2 to 4 weeks. This stage only really back below 31 pence, really delaying the upside scenario. But with all the near-term moving average, the near-term moving averages rising, then one would expect to see decent momentum, especially as we've had an RSI rebound off the neutral 50 level as well, as a leading indicator on a move higher. Stock which I paused on over recent days, like everyone else, probably waiting for a break in Overker Bio of the 15 pence level. Looks like we'll get that today, and above 15 pence, looking for a top of July trend channel target from last year as high as 32 pence. Obviously, that just retests last August's resistance, so pretty simple there. Only back below the recent support area and the 20-day moving average at 13 pence, really delaying the upside scenario. But with the volumes surging on Overker, it looks as though the shares are on their way. Here we've got Supply at Me, which I promised a bit earlier. Interesting to see. I mean, it does actually look a lot like the Icon Labs chart. We have that broadening triangle, which I drew quite a while back. That's from April, so the top of the triangle up to 0.6 pence. And really the highlight here over recent days has been the gap higher that we had to start the week, break of the 50-day moving average, and then break of the initial target, which was 0.2 pence, the sort of the mini triangle from that resistance line drawn from July. Current position, probably we want to see an end of week close above 0.27. If we can get that today or over the next few days, then we can dare to dream of that 0.6 pence target there, perhaps as soon as the end of next month. Velocys is next, stock which has its fans, and the reason for inclusion today really is the bear trap below the floor of that rising trend channel from the beginning of the year down to sort of 5.9 pence. And then the gap higher, so it's a bear trap gap reversal that we've had. Rising 50-day moving average at 7.26 pence, and an end of week close above that today would be a buy signal in its own right. You could either get on the back of the stock off the back of that, or wait for an end of day close above neckline resistance at 8 pence. Either way, the top of the channel at 20 pence would be the 4 to 6 week target on any end of day close above 8 pence, but encouraging to see that gap higher that we've had today. On to the last stock of the selection, Verona Pharma, and a beautiful consolidation that we've had here, and a great break of recent initial August resistance around 85 pence. End of day close above that should give us a retest, a relatively easy retest of the resistance of last month at £1.15. If you're looking for the bigger picture, I would say probably we're heading up towards the top of a rising trend channel, which I'm just drawing at the moment, from January, and that would predict a best case scenario target over the next month or so as high as £1.40. At this stage, it would be disappointing to see sub 85 pence. Stop loss on the bull argument, probably back below the 20-day line at 76 pence. That's it for me today. More updates soon.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.